Hi there, this is Chris from MoneyHub, and this video looks at balance transfer credit cards offers. Now these are being used as examples only, and we've recorded this video in April 2023. The purpose is just to show you what the terminology means, and so that you can sort of know what to look for when applying for balance transfer credit cards. So we've used examples from Kiwibank, we've used one from ANZ, from the Co-operative Bank, and also from Westpac. So let me go straight into the Kiwibank offer. So this is just an example, because these will change from time to time, but the terminology should be pretty similar. So here, if we go down, then we can see they're offering credit card balance transfers for 1.99%. And that's really important, because that's the interest rate that you'll pay. And it's valid for 6 months. You can see the 6 months in small lettering there. So if you have $5,000 and you want to transfer that from a non-Kiwibank credit card to a Kiwibank, then you'll pay 1.99% of that per annum for the interest rate. But of course, you'll pay less if you start paying down the balance. So as you bring down that balance from $5,000 to say $4,000 to $3,000, then you won't pay 1.99% times 5,000 times half a year. Then it'll be a little bit less than that in dollar terms, because you are paying off the balance. Of course, if you don't pay off the balance and you just make the minimum repayments, then you won't really get any sort of tailwind from that whatsoever. So not trying to make that sound complicated, but that's how it works. And then if we just look at some of their frequently asked questions, it's quite important to know that how much is the minimum. So for them, the minimum is $200, and the maximum is going to be the amount that they approve you for. So that means that if you have an $8,000 credit card and they give you a credit card with a $10,000 limit, then you will be able to transfer. Then you'll be able to transfer all of that. But if you've got an $8,000 credit card bill right now and you can't, and you obviously want to transfer that out, but you're approved for $5,000, then you're obviously not going to be transferring all of that. You're going to be transferring $5,000 of that and then leaving the $3,000 with the other, with the existing card. So this is quite tricky. You probably want to be making the right moves to make sure that you pay back, so that you can transfer all of the balance, just to keep things nice and clean, and then take advantage from the low interest rates offer. But these things really depend on your suitability and how the bank assesses you. And they've made it very clear. So when does the balance transfer rate apply? And they've said it's going to apply from the date the transfer is processed, and it's going to finish 6 months after that. So whenever, the period is, if it's not 6 months anymore, if it's 12 months, then it'll be after 12 months, whatever the offer is. Just be aware that, they've been very clear as well with the interest-free days. So normally credit cards have like 44 interest-free days or 55, and it says you won't qualify for this, for the interest-free days on purchases while you're paying off your balance transfer. That's because there's obviously money owing on it. So purchases start incurring interest from the date that they were made. And, if it's not paid in full, and because you're working down a balance, say if you've got $5,000 to pay off and then you use the card to make a purchase, then you've still got money owing. So you're going to be paying interest on that, from day one. So that's really important to be aware of, that they should not, in the case of Kiwibank, probably be used for making new purchases just because you get no interest-free days whatsoever. They've also got some common balance transfer questions here, and it's worth noticing that, they've also mentioned if you are an existing Kiwibank customer, but you want to use one of their offers for a balance transfer, then you can do that, but you need to work with Kiwibank on that. So that's very specific sort of information. And they've also asked, what banks and finance companies can you transfer from? So if we have a look here, this is very straightforward. They've just done a big list. So we've got like Amex, we've got Diners Club, Farmers, Gem Visa, One Card Visa, Gem Credit Line, Q Card, Q Mastercard, Warehouse Money, Purple Visa, Flight Centre, Mastercard. So if you don't see if you don't see what you have sort of listed there, then they're saying that you can still proceed, and they'll assess it sort of thereafter. So that's the Kiwibank offer, and that's how that's what their terminology means and how it works. If we have a look at the ANZ, so they've made their process and their offer quite clear as well. It's a 2-year offer. In this situation, of course, as I said with the Kiwibank, this can change, and it's 1.99%. So that is a longer offer than, of course, 6 months, and the interest rate is the same. So if you were planning to take some time to repay a balance transfer, then 6 months is a lot less than 2 years. So this would give you more breathing space to be able to repay with with the same interest rate. And while you will pay more interest overall in dollar terms, it's not going to jump up to their standard rate. Now, if we just go through, what they've said there, and it's pretty clear that if you transfer to their low rate Visa, then that could help you save on interest and fees. It most certainly will. And then it says, at the expiry from the balance transfer period, then it's going to jump up to 12.9%, which is obviously 6 times plus what you currently are going to be paying with 1.99%. The good news is that there's no annual card fee, so they've made that very clear as well. Now, they've helpfully got a video, which I'm not going to play, but that's just explaining how their balance transfer works, which I think is very useful, and certainly worth something, worth a couple of minutes just to get that through, just to see if there's anything that you didn't know. Now, with regards to where you can transfer from, here you'll see that there's Visa and MasterCards provided by all the banks, and then you've got Amex, but it excludes the Air New Zealand Amex card. So it's just going to be the Amex points cards, not the ones that earn the Air Points dollars. So be aware of that if that is you, then it's not going to, then ANZ's not going to be able to transfer those balances over. But it's also it's also cards from GEM or GE, as it was previously known, and then you've got the Q card. We also think that's going to be a Q Mastercard as well, but you need to ask ANZ because these things do change, and then also the Farmers card. Now, how much can you transfer? So their minimum is $100, and that means if you've got a $500 balance transfer that you want to make, well, then that's fine because the minimum is $100. I know that sounds obvious, but I thought I'd explain that. And then the balance transfer can be as large as you want, as long as you're not going to exceed 95% of the approved credit limit. That's really important there, that if you do have, a $5,000 balance, which you want to transfer from a card to the ANZ Visa, and you're only approved for $5,000, then you're going to be well above, that's 100% of the limit. So you'd be only able to transfer sort of 95% of that, which is around $4,750. And that is because, there may be fees charged if you make a late payment. At the same time, you'll also be paying interest per month while you pay it down. So just be aware that 95% is the ANZ rule, subject to change at any time, but that's what that means. Now, with regards to repayments, this is the same policy as Kiwibank. It's just explained slightly better by them. And that means that for repayments that you make, say you've got a $5,000 transfer and you make a payment of $500, that's going to be applied to the existing debts that you transferred over, and it's not going to be applied to new purchases. And that means that, and they've quite clearly said this, that until your transferred balance is paid off in full, you're not going to get any interest-free days on new purchases. So that means from day one, when you purchase something, it's going to start being charged at their normal interest rate, which is bad news. So you want to avoid that to minimize the interest costs. Now, they've also said if you do have an ANZ card, then you can, consider transferring to a low rate Visa before applying for the balance transfer. That's something to keep in mind, and it's best to talk with the ANZ if you are a customer of theirs, just to find out exactly what your options are. And then they've been very clear here to say if the process of the application is approved, then it can take up to 14 days to complete the transfer. And it's also worth noting here that from day one, not when you make the application, but when the transfer actually happens, that's the time that the interest will be charged. So that's, if you apply on the 1st of March and then you get approved and it transfers on the 14th of March, then you'll be paying the interest rate from the 14th of March. So that's a summary. That's a summary of ANZ. If we just jump over to the Co-operative Bank, so they've made it incredibly clear here with it's a 0% for 6 months. And then you can, it's going to jump up then to 12.95% after that. So they've made it kind of, straightforward. And they've said that the minimum transfer is $100 and the transfer can't exceed 80% of your credit limit. So that's lower, of course, than the ANZ, which was 95%. That's just because the buffer there is pretty much the same wording as ANZ's. Just to account for any fees or interest charges that you'd need to pay. And we only do the transfer from another card once, but you can do multiple cards in one balance transfer. So that's worth noticing. Also, that's worth knowing about, that if you can get, say, a limit of $5,000, a credit limit of $5,000 from Co-operative Bank, and say you have a credit card which has $1,000 owing that you want to transfer away, and say another one is $3,000, then you could get, the 80%, you'd fall well within that, and be able to move that money over. So just be aware that you can do multiple, and that is actually pretty much the situation for all the banks, but some of them don't say it. So do ask them if you are going to apply. Now, just being final points here, is that you can apply online, and if you want to go through some of their other fees and everything like that, well, they've helpfully linked it all below, and you can see that the interest rate is going to jump up to 12.95%. This was at April 2023, so these things can change, and the minimum limit is $1,000, and there is a card fee. So they have been very, very clear, all on one page, which makes it quite helpful. You can see the FX fee if you're making payments later on, and then any replacement fee or anything like that. But of course, the best approach with a balance transfer credit card is really just never to use it for new purchases, and just keep it as a debt that you sort of consistently repay. Now, finally, Westpac. So they're offering balance transfer credit cards usually for all of their credit cards. They're offering balance transfer deals for all of their credit cards. But in this case on MoneyHub, we've profiled their fee-free MasterCard just because it's a cheapie and it's free, and it's going to minimize the costs of repaying. So what they've said, if we go down to their balance transfer offer, and that sometimes takes some searching if you can't see it. So balance transfer, right, so 5.95%. So this is on the higher end, but it's for the life of the balance. So if we click out on that, more on balance transfers, this is something which it can be cheaper, it can be more expensive in the long run. In the long run, it compares to other banks. It's just what the interest rate will be. If you're paying 1.99% for 3 years, then arguably it's going to cost the same as a 5.95% for 1 year. It's just, arguably this is going to add up sort of more over time. If it takes you 3 years to repay something, then it can be cheaper, it can be less. It's going to come down to what you can actually get, and how much you owe and how long it's going to realistically take to pay it off. So first of all, they've said you can do multiple debts into one monthly payment, and that's coming off their credit card, and you can transfer up to 95% of the available limit onto your Westpac credit card, and you'll pay 5.95% on for the life of the balance transferred. So as you pay down, then you're protected and you're locked in with this 5.95%, which is a lot cheaper than, of course, paying like 15%, 12.5%, or 25%, is which, most of the other cards charge. And where can you balance transfer from? Well, you can do like a store card. So they've been pretty non-specific there. It could be a farmer's card. It could be it could be a Valentine's card. It could be a card from Smith & Co. So anything like that. And you can also do hire purchase. So that's quite flexible. And then you can do like a personal loan. And then you can also do a credit card from another bank. And it's very strict, and it says that you can't transfer a balance from a Westpac card or loan. That would kind of cannibalize their own sort of business. So if you have anything with Westpac, then the Westpac balance transfer offer is not going to be for you. And then how payments will be applied. This is very transparent. So all charges and all interest is going to be pretty much shown on your, throughout the statement. And then you can have a read through that. So how your money actually gets sort of distributed is, say if you make $100 payment for a $1,000 balance, then it's gonna pay off the charges, then it's gonna pay off the interest, and then after that it's gonna pay off any cash advances if you've actually taken money out from an ATM, and then it's going to start being applied to the purchases, and then it's going to be from any other transfers and so on. So you can have a read through that if that's of interest. And then the interest is going to be applied on the daily basis. So be aware that 5.95% sounds cheap, but of course that can rack up. So just have a read through this as well, because it is very, very useful. And if you take, they've made this clear. It says if you only make the minimum payment each month, then you're going to pay more interest, and it's going to take you longer to pay off the unpaid balance. So they've also got a calculator, and we have as well. So do some calculations if you have any questions, and then you can apply straight to Westpac. Now, if you are a Westpac customer and you don't have a Westpac credit card or a loan, then you will qualify for, you'll be accepted for an application. Like, you may not qualify if your credit criteria is not quite there. And if you're new for Westpac, then you'll click on that. So that's pretty much a summary, and it's kind of an extension to our existing guide that we wanted to just explain, the cards on offer, so that people know exactly, what these things are, and what they mean. And that way we can just sort of properly make people informed, so they can make a good decision. Now, if you have any questions at all, please do let me know, because we're very responsive to information that's asked of us, also any questions, and we will certainly update our guides as things come to light. But we also want to improve our videos and just improve everything going forward. So thanks very much for watching. Feel free to email us, and you can also leave comments down below. Thanks very much.